G'day guys, how's it going? I'm just doing a quick video on Fibonacci levels. I've gotten a few comments lately about how to draw fibs. For anyone who doesn't know, Fibonacci essentially refers to a ratio. It's named after an Italian dude. I think it was actually the Indians who discovered it. He was the one who brought it to the Western world. He might have discovered it independently. That does happen a lot in maths, but you don't need to know any of that. It's pretty cool. It crops up a lot in nature. You'll see it in things like excuse me, you'll see it in things like the petals of a flower, the ratio that they grow in, or even the shape of your face. You don't quote me on it, but I think it's the length from your eyes to your chin compared to your chin to your forehead. The closer that is to 1.618, which is called the golden ratio, the closer that ratio is, the more aesthetically pleasing you tend to be reviewed as being. So it's pretty cool. Some people think of the golden ratio as proof of God. I don't take it that far, but I do think it's a very cool thing that does crop up a lot in nature. But you don't need to know any of that for trading fibs. So what we'll do is we'll head to the chart. Now, the first thing, so to find fibs, you come over your tools, third section down, and about halfway down, fib retracement is what you want. And then to put them on, you click at the start of the move, at the end of the move. I'll show that in a sec. I just want to show the settings first because, what have we done there? Because I've changed my fib settings from the default ones. So if you want to pause the video, you can make your own fibs look the same as mine or customize them to look however you want. The really important ones, in my opinion, are the 50, so the 0.5. Pretty sure that's technically not a fib level because it's not a Fibonacci number, but it's a Garn number or something. Someone told me that one time. Doesn't matter. It's a very relevant level. The 0.618, that is the 61.8 or the 1.618 ratio that we were talking about before. That's a really good one. And the 38.2, they're probably the three key ones in my opinion. These negative ones, they can be used for targets. I don't really do that, but I do know a lot of guys that do it very successfully. So I'll let you guys figure out how you want your fibs to look. But once you've done that, to draw them, what you want to do is you want to look, we'll come down to dailies, and you want to look for pivots, right? So you can see here, price pushed up, came down, pushed up, came down, pushed up. So those points where it turns around, they're what's known as pivots. A pivot point is where it turns around. When you're drawing fibs, you want to start at the start of the pivot and finish at the end. So for a move up, you start at the bottom. Now I use the wicks. Some people just use the closers. I've found the wicks work for me. But so you would draw from the start of the push, this bottom down here, to the top of the push, which is, so I'm lining it up with this wick here. You'll see that I'm moving across, like when I'm clicking on doing it over here. It's just so that the fibs aren't, let me just get rid of that. So they're not really narrow and, you know, the price or the values get in the way of price action. It just sort of helps me keep my charts a bit cleaner. But yeah, when I'm drawing that, I'm lining it up with that wick and that wick. So you can see here, price came perfectly down to the 50 and then bounced off and went on a run. Sorry. Now, you don't just want to use the fib levels as the solo indicator. You can. I've built a strategy that does that and it works successfully, but it's not necessarily the best way to trade. So usually what you're looking for is where they line up with other indicators. So you can see here we've had sort of a resistance support flip. So this was resistance, then it was support on that big wick down, and it lines up, not perfectly, but it lines up reasonably well with the 50 fib. So, you know, that sort of gives you a few indications that that might be a good place to look for long, or to be buying, or to be closing shorts, or whatever you want to be doing. Now we'll go to the 4 hours and I'll show you the reverse. So if price is coming down, so let's say that we only had this data to go off. So one of the things with fibs is you can't draw them until price starts to retrace. Because if we're just coming down, if we were still, I think that one, if we were still here, you can't really draw your fibs because you don't know if that's the bottom. Like the next candle could just be another big push down, and so then you'd have to extend your fibs and extend your fibs. Whereas once you started to retrace, or even pause, once you started to pause, you have some indication that might be a pivot, and you can sort of start drawing your fibs and looking for your entries. Excuse me. Anyway, so we can see, like, after this, we've definitely got at least a pause. Bulls are coming in, so we can start to think, right, this might be the pivot point. Now, we draw our fibs from the start to the finish. So this move started at the top, moved down, so finish at the bottom. So you're drawing your fibs. Let's get rid of them too. That's not going to work for me. You're drawing your fibs from the top to the bottom. Again, you also want to look for other indicators. So you can see here, this level was, again, a resistance, then a support. So to me, that gives a good indication that it might be a decent level. The price might reject there on the way back up. Now, I would probably also put a level at the 61.8 because I would have this supply zone. So I would think those are the areas I'd be looking for, either opening shorts or if I'd gone long from here, for taking some profit off the table. They're the areas that I think price might turn around. It's coming up. I think they're areas where price is likely to come back down. So you can see we had a beautiful sort of double top off the 50 fib in that level, and then we came down back to the 0. So an easy way to check you've drawn your fibs the right way is to use the 100 or the 0, because the 100 should always be a retracement. A 100% retracement will take you back to the start of the move. It's a 100% reversal, essentially. So you can see we've got the 100 there. So we know that for price to get back up there to 100%, it would have to come back up here. Whereas if I'd drawn them upside down, that would be the 0. So if I'd gone from the bottom to the top, like that, I suppose. Well, that's a 0, but that doesn't make much sense because a 0% retracement means price has gone nowhere. And so that means from the finish, price should still be down here for a 0% retracement. So that's an easy way to check that you've drawn them the right way. Sorry for the horrible jump cut. I completely lost my train of thought, but I didn't want to restart the video because it's already about my 6th take. I'm sick of starting it. So what I'll do here is I'll show you guys one of the ways that I use fibs. So a lot of the time I will use them on a big time frame move, like the weeklies or the dailies, to find where I think price might be coming before it turns around again. So in this case, we can see from this pivot, we can see from this pivot to this pivot, price has started to retrace, right? So I'm looking for entries now. I'm keen. That's on the daily. What I would do is I would come down to the 4 hours and I would look for signs, essentially bullish signals. So for me, in fact, this was a move that I caught. There was the 4-hour demand zone here that had held up before. There was a bit of a, not really, it's a bit of an ugly one, but there was a bit of a bullish, or what's called descending wedge, which is a bullish signal. I think if you go to your indicators, such as the CCI, I think we ended up with bullish divergence, which I'll explain. I'm literally about to do a video on that. So if you don't know what that means, don't worry too much about it, but it's essentially this bit. So for me, this was looking pretty bullish, and on that higher time frame, it was the 50 fib of the daily move. So it's a very significant fib level. So you can see we came down and then had one more drive, and then we bounced. And since then, we've come back up to all-time high, and last night, or maybe the night before, broke that all-time high. So that's essentially how I use fibs. If you're ever unsure drawing them, I find a really good way to do it. If you're ever unsure on the pivots, a really good way to make them stand out more is go one time frame up, because it just eliminates a lot of the noise in between, and it's really easy to see those pivots then. But I think that's about it. So yeah, I hope you learned something. I hope that helps. I hope you get to use Fibs successfully. I really think they're a very useful tool. Essentially, Fibs, supply and demand zones. I mean, like those two are probably 80% of my trading. There's a few other things that I throw in, but those two are really the pillars, I suppose, of my entire trading strategy. So yeah, I'm a really big fan of them. I think they're pretty cool, just the ratio itself. And yeah, good luck. Hope you're having a good bull run.